So in this video, I just wanted to talk you through VAT, how it works and everything, because so far you're used to being not VAT registered, obviously. So you're not having to worry about what you need to do or how it works or anything. So we'll start with why you need to go VAT registered. So you are either coming close to the VAT threshold, which is £85,000 in any roll in 12 months. So it's not your financial year, it's not the tax year, it's a roll in 12 months. So what that means is if you've been going for 12 months, then it's likely that your sales now are hitting the £7,000 to £8,000 a month minimum. And that's taken you over the VAT threshold, or will do very soon. So we need to get you registered for VAT. If you've already gone over the registration limit, you get a 30-day grace, and obviously it's been picked up in one of our checks that you've gone over, so we'll get you registered within that 30 days. If you're coming up to the VAT threshold, then we've been monitoring it, and we're just preparing for when you do go over it. So the first thing we'll do is we'll choose a date when you're going to be VAT registered from. We'll try and tie this in with the start of a month, but obviously if it's partway through a month that we realise you're going to be going over or have gone over, then it'll be partway through the month. So from that date, you will then need to charge VAT on top of your prices. So depending on your industry, depending on how your sales work, who your customers are, it could be that you just simply add 20% VAT to your current existing prices, or it could be that, especially if your customers are the general public, consumers, individual people, you may need to adjust your pricing so that your pricing includes that. So you may be able to increase it slightly, so you're not totally losing out. But on the flip side, from that registration date, you're also now able to claim the VAT back on all your purchases, include VAT. So that's kind of where that is. And I'm going to go into the claiming back because there's a bit of this is one of the questions we get asked the most, basically. So when we say you're claiming the VAT back, you're not physically claiming the money back from HMRC. So what happens is every quarter you'll be doing a VAT return. So on all your sales going forward, we'll add 20% off, or they'll be inclusive of the 20%, depending on how your sales structure works. And then all your purchases where they've got 20% VAT on, we'll split that out. So previously, we've not been splitting that out. It's all just been the one cost. But going forward, we'll split that out into the net, which is what goes on your profit and loss as an expense. And then you've got the VAT amount. So at the end of every quarter, what we'll do is we'll work out the amount of sales VAT on your sales invoices that you've charged your customers. And then we'll work out the purchase VAT of everything that you've purchased. And then we deduct the purchase VAT from the sales VAT, which will give you the rest of the sales VAT, basically. And that is what then gets paid over to HMRC. So you won't be claiming money back physically. It'll just be deducted from what you've invoiced out, and then the difference paid over to HMRC. So basically, you're acting as an agent for HMRC. You're collecting money for them. Obviously there will be, I say obviously, it's not obvious, but sometimes there will be some situations where your purchase VAT may be more than your sales VAT. So for example, over COVID, the last year, our sales have dropped. Well, many people's sales have dropped, especially if you've been closed, but you still had all your expenses going out, you've been paying for stuff. So therefore, you've probably not had much, if any, sales VAT, but you would have had loads of purchase VAT. So that would have been more than the sales. That point is when you'd get your money back. And you'd actually get a refund from HMRC. So similarly to businesses that are seasonal, where you buy a lot of stock in maybe, but you don't sell it for a couple of months, it could be that the quarter you buy the stock in, you claim that back because your sales aren't until maybe a quarter or two down the line. Same for project work. If you're project based, it could be that you've got loads of expenses throughout the whole project, but you don't invoice until the end, which is nothing. We'll come on to in another video because don't leave it all to the end. But this is how it works. So you can kind of understand there will be some instances where you would have some refunds due. But as I say, these aren't very common. So most of our clients, we find it's always you're paying it over every quarter. In Xero, it's all set up. So we'd change your Xero so that when you raise your invoices, you add the VAT on. So we'll get that all sorted for you. As part of our process, we'll get you registered with HMRC for that. And we'll get Xero set up so that it adds all the necessary details on the invoice for you. You'll then get your VAT certificate through the post. And when you receive that, we need a copy of it. And that just confirms your date of registration, that confirms your VAT number, and it will confirm the quarters that you're doing your quarterly VAT returns. And then once you're registered and we've got that, we can get set up as your agent, which means we can speak to HMRC on your behalf. And then once we're set up as your agent, we can then get you set up under MTD, which is the way that we file the returns. At the moment, it's still a two-step process. Hopefully in the future, it'll be a one-step process, but who knows with HMRC. And then obviously, if we're doing your VAT returns, we'll be able to prepare those for you every quarter, and we'll tell you how much you need to pay to HMRC every quarter in plenty of time. So your quarters will look to get in line with your year end. So if your year end is December, for example, we'd look to get your VAT returns as March, June, September and December. So it all ties in. So it'd be a quarter, so it'd be the 3 months. So using that example, the first quarter would be January to 1st of January to 31st of March. You've then got a month and 7 days to for us to prepare the return, to file it to HMRC, and before the payment is due. So it'd be the 7th of the following month, basically, is when the return and the payment is due. They're both due on the 7th. We aim to have everything done by the middle of the month after the end of quarter. So you've got plenty of time. We do recommend you set up a VAT account with HMRC so that you can see. So if you've already got your HMRC account set up, you can just add VAT as a service. You can see an awful lot more on there than what we're able to see. So I really do recommend you get that set up. I can't remember what the other thing I was going to say. Oh yeah, and you can pay for VAT by direct debit, which you can set up in that VAT account when you've got it all set up. And if you pay by direct debit, the payment is usually taken on or around the 12th, the 10th. Scratch the 12th, the 10th of the month. So where the payment, if being paid manually, is due on the 7th, the direct debit is 3 working days after that. So it's usually taken on the 10th, unless you've got a weekend in there, in which case it may be a day or 2 after the 10th. But it just gives you that couple of extra days, and it's one less thing you need to worry about every quarter, having to actually make the payment. So it's worth getting the direct debit set up. So that's VAT in a nutshell, how it works, how we do it. Obviously, there's a lot more that goes on behind the scenes, but to get you started, that's the basics in a nutshell. Hope that helps. Hope that answers any questions you've got. We will send over the proposal to get you up and running. So we charge a small amount for getting you registered and managing that process with HMRC. And then obviously there's a monthly payment for preparing and filing those quarterly returns. And we can go through that with you over a call or over the phone, or a Zoom call, over the phone, or however, or email. And we'll get that sorted out. And as soon as the proposal's accepted, we can then go ahead and get that all sorted for you. So I hope that helps. Any questions, give us a shout.